And there's all this talk about Bitcoin maximalists, right? So there is a theory that, okay, FTT, the tokens, that was where a lot of the trouble was. Maybe Bitcoin's the quote unquote safe part of crypto. I think that narrative is going to get hurt a little bit.
When there's a bad player that just want to do bad things, regulations doesn't prevent it. Banning guns doesn't mean that no one will just take a gun and shoot somebody. That's just one person going crazy or lying or just a bad player. So I think regulations will help, but it will not eliminate this problem.
What happened to FTX isn't news anymore, but the effect of the exchange's demise is still very much in force. It's yet to be seen how far the losses will go and how many companies would still crumble before the whole fiasco is over. Gareth Soloway, a seasoned trader with over 20 years of experience forecasting the markets, gives his thoughts on what to expect from the FTX saga. If you love being updated on the economy and the markets, then be sure to subscribe to this channel so you never miss out on updates and analysis. Now let's hand it over to Gareth Soloway.
There's no doubt there is going to be a chain reaction of issues, right? I mean, when you have these institutions, number one, the biggest thing for crypto right now is that when you have big institutions that get burned to the tune of billions of dollars that they invested in FTX, they're not going to go invest in more crypto projects until we get regulation and transparency. So right away, that just shuts off that door to the rest of cryptocurrency. And that's a problem, right? I mean, it's going to stop innovation in the near term. It's going to make it so hard to raise any capital until we get this regulation out there. So I think overall, he's right in that it's going to cause more pain. There's no doubt that it's just the tip of the iceberg in terms of other, hopefully no one any bigger than FTX, but there's going to be other bankruptcies. And I think if you look at the .com era and compare what went on there, you have to expect a lot of these smaller cryptos to ultimately get flushed out and go to zero. Again, in the .com era, we saw the same sort of greed driving some of these companies that had no reason to go up to, $100 million valuations or greater go up, and they had to be taken out. And I think that's exactly what we'll see here in the crypto market for the next 3 to 6 months. So I think FTX might end up being the biggest one, but I do think there's more dominoes to fall. So again, hopefully we're towards the end of it, but I'd be shocked if there aren't more bad actors out there that were making bad bets, especially if Bitcoin's going down sub 15, more are going to be revealed.
FTX is taking with it a slew of venture capital firms. The total amount of investments is estimated to be several billions of dollars. Chamath Palihapitiya, a billionaire and venture capitalist himself, expects that about $700 billion would be lost indirectly because of the FTX crash and other related economic events. He believes FTX is just an omen of what's to come. Mr. Chamath says that we should expect massive sell-offs because there's going to be a massive crunch triggered by the Fed's continued rates hike. These sort of market conditions were the same that tested FTX to its limits until it eventually crumbled. Venture capital firms are to expect this crunch to sweep through the sector, and a lot of VCs wouldn't survive. It should be made clear though, Chamath isn't saying that FTX took $700 billion from venture capitals, but the same conditions that led to the collapse of FTX are going to get to the majority of venture capitals in some months to come. The point is that the economy has a long way to recovery. FTX raised about $1 billion in 2021, and Sequoia Capital was the leading funder. The California-based VC is one of the largest in the world and has raised over $22 billion in funding 33 startups in recent years. With such a big investment firm taking the lead, it was natural for many others to trust FTX as a worthy startup. A lot of other VCs such as Blackstone, SoftBank Vision Fund, Coinbase Ventures, NEA, and many others also pitched in their investments. He was so bad that even the Ontario Teachers' Pension Plan had invested in FTX. According to Gareth, the implication this would have is a capital flight away from crypto businesses. A scandal involving so many prominent venture capitalists will almost certainly have ramifications when those same firms consider their next Web3 or crypto investment. How excited will they be to make that investment? You can be sure that they wouldn't be eager anymore. When considering their next crypto transaction, even crypto-focused firms like Paradigm and Multicoin Capital may experience what experts are now calling a post-FTX syndrome. It may even have an effect on their due diligence process for non-crypto transactions. Next, Gareth gives his prediction for December and the year 2023.
when I look at FTX, I see Lehman Brothers. And I haven't heard anyone else drawing this comparison. But if you look at the power that Lehman was in that time as one of the major banks and where FTX was as one of the major exchanges, both of them failing make a lot of sense as being that catalyst. Now, what's fascinating about this is if we go to the S&P 500, right? And I'm going to go all the way back here. We're going to go all the way back to 2008. Bear with me as I get there because it is quite a ways back. But if we go all the way back, what we can see is that when Lehman Brothers occurred, all right, this is where it occurred right here.
Yeah.
You can see that the S&P was not at a bottom. So it wasn't the bottom, but it kind of created that last drop in the markets that brought us to the low of 2009. And so one of the things I was thinking about is, okay, it took about 6 months from Lehman Brothers to the low on the S&P 500. So in that thought process, if FTX is the Lehman event of the crypto markets, you're looking at about 5 to 6 months before we bottom, which puts us in April of next year, May, somewhere June-ish, right in that vicinity. And then if you look at the price decline, it went from about 1,200 and change to the low in 2009 of around 600 and change. So 40 to 50% decline. So then if we map that over to the crypto markets and we go to Bitcoin here, what's fascinating about this is that you basically take a 50% decline from about 18,500, which was the break point. And if you zoom out, there's a long-term trend line going back to 2017 before the bull market to the 2018 lows of the bear market to the crypto low. And where does that trend line go? Basically to that 40, 50% decline. So for me, I start to put the pieces of the puzzle together and say, okay, this cycle, again, not quite the same as past cycles. This will be a little bit of a bigger correction, which makes sense with the Fed and with what's going on with FTX. But again, you can kind of start to see the similarities developing in this environment versus what happened in the Lehman Brothers collapse. And I do think it's very, very similar. And remember, it's similar because greed and fear are what rules investors, right? It's not, there's no fundamentals. It's greed and fear. Fear drives it to the downside. Greed drives it to the upside, to the crazy extremes. And so the Lehman collapse created the same type of fear that the FTX one is, which is people drawing out their money from exchanges and so forth. So it's kind of cool to think about it like that. But then that's to me what I'm expecting here. I think this is the final drop, and I think we'll bottom in the next 5-6 months.
To understand how far-reaching the collapse of FTX would be, we have to look at the history of companies and financial firms that had similar scandals. Many comparisons have been made, and the three prominent ones are the Lehman Brothers crisis, Enron, and the Madoff investment scandal. Sam Bankman-Fried, the creator of FTX, has been dubbed the Bernie Madoff of crypto after the infamous con artist who carried out the biggest Ponzi scheme in history, which had amounted to over $60 billion. But Gareth concentrates on the Lehman Brothers investment bank scandal, which occurred in 2008 and contributed to a global financial crisis brought on by subpar investments and exorbitant mortgage valuations. Lehman Brothers Investment Bank had overvalued properties totaling more than $600 billion. It would take 6 months for the entire mortgage market to completely collapse before the recovery even started. According to Gareth, it would take that long to recover, and a market decline should be expected until mid-2023. Thanks for watching. If you enjoyed this video, be sure to give it a like and subscribe. We can promise you only the best market analysis. We'll see you in the next video.